Well, first I'd like to welcome you to this recorded go-to webinar. On the phone I have myself, Eric Morganson, we have Bob Hutchins, and then we have a favorable broker, Tom, on the line that's going to be going through some questions with us. Right now we'd like to just start this off by taking you to our home page on our website, which is angeloakms.com. You'll see right on our homepage we have a link as Bob Hutchins is going to drive, and you'll see the link to the lower right-hand corner that says Quick Quote. Bob, you want to take us through a quick quote?
Yes, I certainly do. This is your quick quote tool here. You can see there's no login required, and you'll just be able to go this anytime you like and plug in your loan scenario. For qualification, it will show you the LTVs available and the pricing. So you never have to worry if you're looking at the right matrix or anything like that. This quick quote tool is always up to date. For example, a common scenario I've seen, maybe we have a borrower with decent credit, 720 score, want a nice $1.5 million loan amount. They've got a little bit of money to put down. The problem is they had a foreclosure 2 years ago. Well, you can see the quick quotes asking if you've had one in the last 24 months, but if not, maybe they've been renting the last 2 years. So you can see it automatically pops up, and it's given us our 5.75 rate, $1.5 million loan, 20% down, 2 years out of a housing event, 2 years out of bankruptcy, only need 6 months reserves. You can see it's also telling you you can go all the way to 90% in this scenario, for $1.5 million. Switch your LTV to 90. There's your rate in the sixes, 90%, single loan with no MI. That's how quickly you can get your Angel Oak pricing. Now maybe this is a self-employed borrower and they can't provide tax returns. We'll switch this to a bank statement program. You can still get your 90% LTV using bank statements to qualify. And maybe they want to put that 20% down. Here's your 6.375 rate at 80% on a bank statement loan to $1.5 million. So that's how quickly you can get your pricing. Eric, anything you want to add here? Any particular scenarios?
Yes, I do. When we're going off of these scenarios, Angel Oak only uses the middle score of the primary wage earner. The only exception to that is if a husband and wife own a business jointly. In that scenario, we're going to go off the lower of the two, but mostly we just use the middle FICO score of the primary wage earner. Also, these loans have no prepayment penalties if they're owner occupied. All of these loans are impounded, and that is mandatory on Section 35 lending. So with that said, Bob, let's take them through, let's say, gosh, my borrower is delighted at an 8.75% rate, no prepay, can go all the way to 90. That's impressive. How do I go ahead and submit a loan to you?
Yeah, you're going to click right here where it says pre-qualification request. This is how simple this is. There's no DU or LP or anything. I'm your pre-qual machine. So you're going to select Bob and Eric here as the AE, fill out the very simple form here, just a few mandatory questions so we know what's going on. You're going to upload your 1008, 1003, and credit report in PDF format. You can put any comments you want in here in the comments section that might help me out or tell me when you need it. If it's not obvious why you need Angel Oak, maybe you put the comment in there. Maybe there's a housing event that doesn't show on the credit report, for example. And you just click right here. You don't click in this little box here. You click right here, and that's going to submit the pre-qual request to me, which I review usually same day, or if I get it later in the day, you'll have it in the morning. Sometimes I'll come back to you with some additional questions and clarification. But that's all you have to do to get started. Then I'm going to issue a pre-qualification determination, which includes the next steps, which is the disclosure request. So that's how simple you can get your pricing.
Thank you.
And request a pre-qual.
That's it. In all loans, whether you be a broker or a correspondent with us, all loans start by first being pre-qualified right through this. This is as simple as it is. You see, we structure the loan for you and let you know if this is something that we can do or not. From there, you would request disclosures. We would send out the LE to you, the person on the phone that lists themselves in this pre-qualification form, to double check that, making sure you're getting paid what you want to get paid. With that said, after you've approved the LE, we push it out to the borrower for electronic signature or wet signature, whatever your borrower wants to do. We obviously prefer if they just sign this stuff electronically. With that, once the disclosures come back and the borrower has signed the intent to proceed, at that point, you upload the 3.2 file into our portal. We will have the disclosures, and that's when the loan goes to underwriting. We are typically about 48 hours in underwriting, and the reason why we are so quick is because you can see we are structuring these loans on the front end. Bob, anything you want to add to that?
I would also add that once you do approve the LE, we're going to go ahead and lock that loan for 60 days. Our rates are not really market sensitive, so we're going to give you a 60-day lock, and that way we'll be issuing a locked LE so we don't have to do a change of circumstance later. Saves a whole extra step there. And also we have several approved AMCs available here on the website. You would order the appraisal through one of our approved AMCs. If you tried to do the loan in-house and we're not able to, we would accept a transferred appraisal if it meets our guidelines.
Thank you for that, Bob. At this point, Bob, if you don't mind just pulling up the bank statement matrix.
I just happen to have it right here.
So as you can see, there are some pricing hits if the borrower wants to do cash out, if he wants an interest only. The interest only is a quarter hit to the rate. 30-year fixed is a half a point to the rate. Otherwise, these are 5-1 ARM programs on the owner occupied. But these are very aggressive.
Correct.
Bank statement programs. Go ahead, Bob.
Yeah, I'd like to add that, I don't know, Tom, if you've done a bank statement loan before, but these are easy loans. These self-employed borrowers generally have pretty good credit, and they've got plenty of money to put down. They're just not able to show their income on their tax returns. So we're going to use either 12 or 24 months personal bank statements, or we can use a P&L supported by a business account. And we're going to use that to document the ATR, the documented ability to repay that is required on these loans.
Yes, Bob, that's the bank statement loans are something I'm really excited about, and I love the way you guys handle them because we gather all the information up front, and you help me structure the income, and they seem to fly through underwriting. So I love these loans, and more importantly, my real estate agents love these loans.
Thank you for that, Tom. Good.
That's right.
Bank statement loans are normally big loan amounts because not a lot of W-2 wage earners out there buying a $2-3 million home. These are self-employed entrepreneurs. They're risk takers. A lot of times we'll see these bank statement borrowers have had a bankruptcy in the past as well. So they're always big. Where you're paid on basis points, you really want to get good at these bank statement loans.
That's right, and you can see we go to $3 million on these loans here. And also I'd like to add that this interest-only option is popular with the self-employed borrowers who like to have control of their money. Just a quarter to the rate. It's a 10-year interest-only period. Must qualify at the fully amortized payment. We just require a 660 score and a loan amount above the conforming loan amount limit in order to qualify for the interest-only option. So this is a big hitter program for us. It's just about a third of our business is on this bank statement program. And with that, I'm going to transition to a very similar program. The matrix is very similar, but it's a full doc program. This is our Portfolio Select program. A very similar matrix. The rates are about a half a point lower because it's a full doc with returns loan here, again to $3 million, 2 years out of foreclosure, 620 credit score required, this is our big hitter right here. Anything you'd like to add, Eric?
Yeah, thank you for that, Bob. Guys, well, we think it's silly that you make a borrower who can show the ability to repay a big jumbo loan. Why make him wait 7 years after a foreclosure or a bankruptcy? We think that's ridiculous. We're doing this 2 years out, and they're delighted to be back into being homeowners and building equity. And as Tom had mentioned earlier, real estate agents do backflips over these programs. They love them because, candidly, they know a ton of clients out there wanting to buy but believe they can't qualify. That's not true with the Angel Oak programs.
I have a question.
Right.
Will you do non-owner on these portfolio, the portfolio select or the bank statements? Can you do non-owner occupied transactions?
Great question, and absolutely yes. You can see here there's just a slight rate adjustment for the investment property. All investment properties would be priced with a 2-year prepay, which can be bought down or off. But certainly we can actually go to 85% LTV on this program on an investment property. And again, that quick quote tool, just switch this to investment. We're full doc on the portfolio program. Here's your pricing. It's telling you you can go to 85%. So just that easily, I was able to adjust my quick quote form to see the availability of an investment program.
Guess I should have gone there first. Thanks.
Well, once you use that tool, it's very handy. And the best practice is to go there first and get your Angel Oak pricing to plug into your LOS so that you're submitting an accurate 1008 with the DTI calculations for review at the pre-qual level. So that's the best practice. And that transitions us right into the next program, which is kind of the fallout program if they don't qualify for portfolio. Maybe they got a score below 620, or they're less than 2 years out of foreclosure, short sale, bankruptcy. So this is the non-prime program. You can see down to a 500 credit score. We can still go to $1 million loan amounts. But this is a very popular program, a big segment of the market that's been ignored for the last 8 years. And Eric, you want to tell them about the debt consolidation opportunities with this program?
I do. This is a program, candidly, nobody ever thought was ever going to come back. Credit is not the main determination on the worthiness of a loan. Angel Oak believes it's truly in the ability to repay, or the ATR regulation. There's a lot of 740 credit score borrowers out there that's strategically defaulted. So with this said, we use credit to price the loan. These are all risk-based price loans. And you might see the coupon being quite high. You'll see even go as high as a 9.5% interest rate. You might think, how in the world can I sell that to a borrower, 9.5? Well, here you have literally millions of Americans that have an enormous amount of revolving credit card debt. Their FICO score is below a 680, so they can't get a HELOC. They can't get a home equity line of credit from Wells Fargo or a credit union. And candidly, the only way they can tap into the equity in their property is if they sell their house, and they don't want to move. So with this program, we can pay off debt with low credit score borrowers and make that debt now tax deductible. And as long as we're in an all-time high rental market right now, so even on a purchase, you'll see that these high coupons, it's still cheaper than them renting right now. But here's the thing. America doesn't know you're basically shut out of home ownership. That is not the case with this non-prime product.
Hey, Eric, this is Tom. If you don't mind me commenting, to some of your other customers, but what I've seen, the key here is really just seeing rents skyrocket in our market. And so when I talk to the borrowers about any of these non-agency loans, I'm really talking about what their payment is going to be, not really what their rate is.
That's it. That's exact, Tom. Good point. If you're selling rate, this isn't for you. If you're selling, hey, the fact that they can get a house or they can tap into that equity, and this is what their payment is, there's where the borrower is extremely motivated, because candidly, paying off all their debt into a debt consolidation non-prime loan, you're taking their monthly outlay which is maybe $5,000, and reducing it to like $3,100, and they're just delighted over that. So, yep, it is in payment. Thank you for that. All right, Bob, with that, you want to transition into our investment?
Yeah, just a couple more points on this real quick is that we would also allow a rent-free borrower on this program, and we have a limited trade lines option, no trade lines required. So there's some other things we can do with this program as well to help get that borrower in a home. So with that, we'll transition to a very popular program, our Investor Cash Flow Program. This is a no-income verification investor program. It's your competition against the hard money lenders, and you'll win every time because it's a 30-year amortization with no points to the lender, and the rates are quite a bit more than the hard money rates as well. So Eric, you want to talk a little bit about this program?
I do. You guys, this is disrupting hard money out there. Hard money traditionally charges 2 to 4 points. We see their rates are in the high 9s, and we've seen as high as 12, even 14% hard money. This is non-owner occupied, so we don't have to actually play with the ATR. The ability to repay is not a part of this. So I call it the no doc. You don't put any income on the 1003. We're basing it upon what the appraiser states is fair market rents for a property of that nature in that area, and as long as it cash flows 10% or greater, the loan works for us. Now, we'll go to 75% LTV on this, and as you can see, it's a 7-1 ARM, where hard money is normally a 1 or 2 year balloon. So we have brokers out there pulling title on where there's private lenders that are paying an enormous amount of interest, owner-occupied, in on their investment property out there because they had to buy it on the steps of the courthouse and they needed to close it quick, and they want out of those hard money, non-owner occupied loans, and we're refinancing them into this. So and we'll allow an unlimited amount of finance properties under this as well.
Correct. And one scenario I see quite a bit is you have your professional investor, maybe they own a bunch of free and clear properties, and they'd like to cash out on a few of those and go buy more properties. That's a scenario I see all the time. And it's a very simple calculation. PITI divided by market rent must be a 90% or less debt service ratio. For example, your PITI payment is $900, your market rent from the appraisal is $1,000, you have that sufficient 10% positive cash flow that we're looking for. Employment and income are blank on the application. Any questions? If not, then I'm going to transition to these editable marketing flyers that we have available for you, where you can plug in your logo, your NMLS, your contact information, and get these out there. Eric, you want to talk about the marketing opportunities on these non-agency loans?
I do. And by the way, we allow non-warrantable condos on these as well. You guys, it all starts in getting the word out to your referral partners and letting them know you have access to these programs. Chances are your realtors, the good ones, know 10, 20, 30, maybe even 40 families or people that have had a foreclosure or a short sale. Chances are they probably sold them the house. And that's a high trust relationship. Now, realtors are looking for listings and they're looking for buyers. How about having them go through the black book of people that they had one time sold a house to and letting them know about these programs that maybe they can put them into a house today. But it all starts on using these marketing flyers. Only work when you use them. And please, after this this GoToWebinar, please feel free to reach out to myself, Eric Morganson, with any type of marketing questions. I have a lot of great marketing scenarios that are free for you, and they work. With that said,
and I'd like to add that Eric and I do work as a team. He is the sales and marketing arm of this. He can help you find these borrowers. I'm your non-agency help desk. I stay here at my command center where I can take your calls and quickly answer your emails and help you structure these loans. So we have different skill sets, and it works out pretty well.
So let's refer to our broker.
Tom, any
questions for us?
I really don't, guys. That's very thorough. I mean, I've done business with you guys for a long time now, and love the way you operate. So no, you addressed just about everything.
Okay, good. Well, with that said, I am Eric Morganson. Bob Hutchins is, we do work in tandem. There's our contact information. We're looking forward to structuring loans and run scenarios by us. With that said, thank you very much for your time once again. This is Eric and Bob with Angel Oak.